Good morning, everybody. Jeff Dice from Monetary Metals here, and I'd like to talk to you about safe deposit boxes in commercial bank branches. Specifically, why you shouldn't get one, and why, if you have one, you should empty it out and close it out with your local bank. Our parents and grandparents, of course, use safe deposit boxes to hold things like important papers, maybe the deed to their house, old-fashioned physical paper stock certificates, or their will and trust documents. They also used boxes to hold valuables, things like jewelry or family heirlooms, physical precious metals like gold and silver, and they may have even kept some physical cash on hand for a rainy day. But times have changed, and we need to see commercial banks as they really are in 2023. So first and foremost, these recent high-profile bank failures are certainly a cautionary tale. Now, you might think that your local bank is not one of the big boys and that it's safe. It doesn't engage in risky practices or have famous tech companies or celebrities as depositors. And that might well be true. Lots of regional and local banks actually have very solid Texas ratios, which measures the amount of non-performing assets they hold relative to their total equity. And your bank may have a modest mortgage portfolio, for example, with good local people making their house payments on time. But this contagion is different. Treasury debt itself, which normally is a rock-solid asset on a bank's balance sheet, is the non-performing asset. So treasuries that pay 1% are worth a lot less than treasuries paying 4.75%. As a result, your friendly hometown bank could be deeply insolvent, even though they played it safe and in fact held the safest bonds in the world issued by Uncle Sam. And make no mistake about it, when a bank goes into FDIC receivership, its branches are closed. Doors are locked, the ATMs are down, and the FDIC can transfer the assets of that bank without your consent. In fact, with no court involved at all. Not the situation you want to be in. And interest rates on deposits at banks, commercial banks, run well below inflation and also well below money market rates. So as the Wall Street Journal recently told us, many depositors have chosen to pull their money out of their local bank and into one of the big four mega banks, whose failure the US government would almost certainly take great pains to prevent. And wealthier depositors might just go ahead and put their cash into a money market fund with a giant like Vanguard, where they still enjoy so-called FDIC insurance, but get higher interest on that deposit. So in both of these scenarios, the rich banks get richer and your local bank gets riskier. Second, what you think of as safe deposits in locked metal boxes are not insured by the FDIC or by your bank itself. In fact, most banks use a bunch of fine print to say exactly how they're not liable for anything that happens to your box or to its contents, at least not above $500 or so. So your box is not a deposit account, and there are no federal laws requiring your bank to make you whole if something happens. With so many banks merging and changing ownership, we've heard some real horror stories about how unsafe these boxes really are when people show up and find the contents just aren't there. The third reason to ditch your safe deposit box is privacy, which is to say you don't really have any. Now, in theory, of course, a government agency, federal or state or local, needs a court order to examine the contents of your box, unless it's the IRS, in which case a simple prejudgment notice of levy will suffice to freeze your access to your box. Again, no federal law covers this, so it's a patchwork of state laws. Some states even allow their estate tax officials to audit the contents of a box when someone dies, even if the family hasn't seen it first. You might also remember back in 2022, a case where a federal judge blessed an FBI raid on a safe deposit boxes in a non-bank private vault in Beverly Hills. These agents effectively seized millions of dollars in cash from about 700 depositors based on a generic search for evidence of unknown crimes by just a few suspects potentially having deposits at this private vault. So much for the Fourth Amendment and the need for specificity in a warrant rather than a fishing expedition. Some of these vault customers lost their entire life savings and are still suing the federal government to get their money back. So if this could happen to a private vault in Beverly Hills, do you really think the 20-something teller at your local savings and loan is going to question a tax official or a Fed with a badge? Finally, you should understand that banks themselves hate safe deposit boxes and are phasing them out as fast as they can. These boxes take up space, They're a headache to administer, and most of all, they don't make money for banks anymore as home security systems and alarms have improved. So you might not even have a choice much longer, even if you've had your box for a long time. You might find that your bank notifies you to come close it out. Do you really want to be a customer of a product that they're not interested in supporting or maintaining? I hope all this makes you rethink safe deposit boxes and whether you should have one. And apart from these worries, you might lose the key. You might forget to tell your family about it, and you might simply become old and incapacitated and leave those assets untended. So if you can, get a safe at home. If you're not comfortable storing much physical wealth inside your home due to crime or a fire or flood or other risk of loss, consider a private vault for things like physical precious metals, which despite the FBI disgrace I mentioned earlier, are still safer than commercial banks. Finally, consider keeping at least a few $1,000s in physical cash at home, because we've entered an era where bank failures and shutdowns are not hypothetical. You don't want to be on the outside of your bank branch or closed ATM, unable to get your money. Thanks so much for joining us. I'm Jeff Deist with Monetary Metals.